Private property transaction volumes hit a low in the second quarter of last year when Singapore went into a circuit breaker. Volumes have been on a general uptrend since then, with the URA price index rising for the 6th straight quarter and the SRX index up for the 5th straight quarter.
We have cheap mortgages that are slightly above 1% now. In fact, we have demand coming from HDB upgraders who profited from the recent rally in HDB resale prices. And then we have some industries, for example, tech and finance, who continue to thrive despite the pandemic.
The data also shows that residential prices are on an uptrend, while office and retail are trending lower, and the gap has widened ever since the pandemic.
Most of the owners are now looking to buy first before I sell. Why are they looking to buy first before I sell? Because when I buy first, I've already secured the unit, I'm not so concerned, because now in this market, buying is harder.
The bullish sentiment is also reflected in the public housing HDB resale market.
From what we learned from the ground, many of these resale flat buyers are in fact first-timers, as the pandemic directed many of these first-time homeowners to owning their homes earlier than expected, driven by a desire for more space and also to avoid long waiting time for BTO.
In the first 10 months of this year, the number of million-dollar HDB transactions has already exceeded that of last year. SRX data shows there were 194 HDB flats that were transacted for at least $1 million. This is up over 220% from the same period last year.
Actually, some of the transactions that you see, the $1 million HDB that you see, they are actually owners of landed properties or condominiums who are actually downsizing or right-sizing their property.
A breakdown of the data shows that suburban areas in the outside central region have been gaining popularity since the beginning of the year.
This trend can be attributed to the work-from-home culture. OCR condos usually offers a larger space for the same price point as compared to the other regions. There are always something that is going on for OCR, like new plans or maybe better connectivity due to future new MRT lines.
The core central region, or CCR, remains attractive and is expected to pick up when foreign buyers return. Since
the circuit breaker period last year, CCR has the lowest price growth among the regions, with a mere 5.7% growth so far, compared to OCR's 11.5% and RCR's 8.3%, according to our index. CCR, they didn't increase as much because we are also seeing a decline in foreign buyers due to the pandemic-induced travel restrictions. But we expect stronger foreign purchase in the quarters ahead.
Many researchers believe we're going to see a reversal of decentralization once we get into the new normal. And then we'll see a revival of the central urban core. We actually start to see a little bit in Singapore. That's in the last 3 quarters, from Q1 2021 to Q3 2021. For all the 3 regions like central, fringe, and outside central, the rental and the price start to move up.
For buyers like Kelly Chu, location and amenities were the reasons for her property purchase in Novena in the CCR area.
I specifically wanted somewhere with very, very good schools. Also because Novena is actually quite close to a number of schools as well. The second one is that for this property, it's actually located 5 minutes away from the MRT, and it's a very walkable distance.
Property agents also notice that buyers are targeting bigger units.
The smaller units, the 2-bedroom and below, the demand is still relatively stable. But those properties that are 3-bedroom, 4-bedroom, or even bigger 5-bedroom units, they are actually very much in demand because of home-based learning, because of work from home.
The main trend now is that you can see that a lot of buyers are going for the larger properties. The landed markets are also experiencing quite a huge amount of demand. Right, the surge begins right after COVID, where all your condo buyers were selling your houses at higher prices. They are looking to upgrade due to the COVID work from home situation. A lot of people want bigger spaces.
This trend is, however, not reflected in the median square feet for resale condos, even though the median square feet for new sale seems to be on an upward trend.
We are in fact seeing smaller and smaller resale condos being transacted over the years. So the median square feet for a resale condo is roughly 1,100 square feet now. And this is a decline of about 8% from 2017.
In the HDB resale market, 4-room flats are still the top choice, but 5-room flats have become more popular than 3-room flats.
From the data, transaction data itself, 5-room resale flats are gaining slightly higher popularity since the pandemic started, but not by a huge margin that is very significant. And meanwhile, 4-room flats remain as the majority, as in the most popular type.
In the luxury tier of the market, demand has also been strong. Luxury homes are divided into 3 tiers according to Property Guru. The entry-level homes have prices ranging from 2 to 4 million Sing dollars. Prices can go as much as 8 million Sing for deluxe luxury homes, while prices for ultra-luxe homes start at 10 million.
The high net worth individuals as well as the ultra high net worth individuals, they are less affected by the vagaries of the economy. And many of these luxury property buyers, they are not speculators. They are here to invest their money for good value.
Property Guru says increasingly more of these luxury home buyers are local.
Domestic buyers are becoming a dominant force, particularly budding entrepreneurs in emerging industries like biomedical, fintech, and big tech. And the segment has seen a 4.5% growth in luxury market share in the first half of this year as compared to last year. Some 72% of buyers are locals, and then the rest are foreigners.